All right, good morning. I thought it'd be useful for a couple of people to get a bit of a breakdown of exactly what I do. For those that have been here before, things have changed a bit in the last couple of months. I thought it'd be useful for us to go through. But I'm going to start pretty much from scratch. I'm not going to go right back to basics because that would require like a 2-hour presentation, which I do not have time for today. But yeah, we'll go through it one step at a time. The market opens in 15 minutes and then we'll be trading live. So I trade the DAX index, which is an instrument that tracks the price of 40 of Germany's biggest companies. So if those companies are doing well, then the index is going to go up. If they're not, then it's going to go down. It's not really so much dependent on the company's performance as it is general global sentiment. So at the moment, the market is really being controlled by what's going on in the Middle East with the US-Iran situation. So it's highly complicated, but my job is not to trade based off of what's going on in the world. It's purely looking at these candlestick charts here. Now, what this candlestick chart is showing me where the price is going up and down. So on this chart that I've got up currently, each of these bars represents 15 minutes of time. If the bar's green, it means the price has gone up during that 15-minute period. If it's red, then the price has gone down. I'm not going to go into the nitty-gritty this morning. I might give a bit more explanation when the market actually opens. But for now, I'm going to try and keep it super simple. So I trade a specific strategy developed by a trader called Tom Hugard, who I watch live on a daily basis. No way I could trade without learning from someone else that's already been there and done it. But I've taken his strategy and I have adapted it to fit to my tastes specifically. My taste being I want data behind how I trade because I haven't got years and years of experience. He's trading based off of 30 plus years of experience in the markets. I don't have that, so I've got a load of data collected, which is sort of, I'm relying on that rather than relying on experience. So what I'm going to do is go over to some slides and explain my strategy. It's super simple. And we'll go one day at a time, and then I'll show you the data that I use to actually trade off of. So this is a random day that I've just come up to. So this is the 5th of March of this year. The market opens 8 o'clock, which is this first bar here. So where my cursor is, that's 8 a.m. and that's the market opening. And my strategy is based around the second 15-minute bar. I'll go to a different day where it's a bit easier to see. Okay, let's do this one. So the market opens here with this red bar. Okay, 8 o'clock. That closes at 8:15, and then the second 15-minute bar is here where my cursor is, 8:15 to 8:30. Okay, so this is the bar that I'm concerned with and that I trade based off of. So this is called the school run bar. The term school run is Tom's own name that he gave it. And I trade based off of the market breaking either above or below this 15-minute candle. Okay, so I have a load of data which tells me when to buy and when to sell, depending on whether the market breaks below or above the candle. Okay, I have got every single trading day pretty much since the 6th of January 2025, where I've analyzed a whole load of variables based on that second 15-minute candle. Okay, so I've got it. I'll go through the variables one at a time, and then I'll explain what they mean on the chart. So first of all, we've got whether the market's gapped up or down. So the German index closes at 4:30 p.m. UK time, and then it reopens at 8 a.m. UK time. But there's still trading going on overnight. So the market won't necessarily open at the same price that it closed the previous day. And that can affect how the price behaves for that session. So I've got whether the market's opening higher than it closed the previous day. That's a gap up, or whether it opened lower than the market closed the previous day. That's a gap down. And then I've got whether the first and second bars were green or red, so whether the price moved up or down. And then I've got bar 2 relative to bar 1. So was the second bar lower in price than the first bar? Or did the price go up, or did it stay the same? So if I quickly show you on this chart here, we would have, this was a gap up day. So the market opened above where it closed the previous day. And the first bar was green, second bar was red, and the market made a higher high. So if we go back to this day, if we go to the 18th of November, and we have a quick look. So we have a gap, we have a green bar, we have a red bar. Okay. So it's all quite simple. It's just plotting in different data points, and then the relationship between variables is what tells me when to trade and when not to trade. So the next variable is the overnight range location. Okay, so the overnight range is the price range in the DAX during the Asian session, which is overnight, which is between 1 a.m. to 7 a.m. Okay, so I draw this box. So these blue boxes that you see dotted all around the chart, that's the overnight range. And this tends to act as an important price area. If the market breaks higher above the overnight range, that's generally very bullish, which means the market's likely to move higher. If it breaks below, it's likely to move lower. And if it's still stuck within the range, it's generally best to bet on the market staying within the range. So that's a very key thing, another key variable that I factor in. Trigger just means whether the market breaks above or below the school run bar, which is our second 15-minute bar. And then we've got whether the traditional entry or the opposite entry would win or lose. So traditional means buy above the school run bar. So on this particular day here, the market broke above the second 15-minute bar. Okay, so traditional school run would be buying above or selling short below, which means betting that the market's going to go lower. The anti, which is the opposite, would be selling above the high and buying below the low. And depending on the variables of the day, sometimes it's best to do one or the other. And then the final variable is the key level. So I have 4 key levels. We've got previous day high, previous day close, previous day low. And I'll show you, I've marked it out for today. So where the market is today relative to where it was yesterday is also important to factor in. So previous day's low price was down here. As you can see, yesterday afternoon, the market came down here. The market closed at 4:30, which is where this dotted line is. And then the high yesterday was at lunchtime, all the way up here. Okay, so where the school run bar this morning is positioned relative to those 3 key levels will also inform my decision on where to trade, how to trade. Okay. So if you don't know anything about this, this is a shitload to take in. But there's no other way to do this than throwing yourself in the deep end with it, really. So that's my data. Let's go through a few specific days. So I've got another sheet where I track all the trades that I take. I put in pretty much all the data from each trade. So let's go back to some of the recent sessions. So let's go back to the 9th of April. Okay, let's find the 9th of April. Okay, so this is the 9th of April, and I did take a trade on this day. Okay, what I'm going to do is I'm going to put in the variables in my Excel sheet, and it's going to tell me the probability of winning should I take a trade. Okay, so we have a gap down, and the first two bars are both red. So let's put that in now. Okay, so we can put the filter on. We can go gap down. Bar 1 was red, and bar 2 was red. Okay, bar number 2 relative to bar number 1 closed below. Okay, so the market moved lower and it closed lower. Overnight range location. You can see the blue box here faintly. I'm not sure how clear it will be for you watching this. But we wicked lower. Okay, so the price moved lower below the overnight range. And then the entry signal was below the school run bar. Okay, so now we can go through the stats. So if I sold short below the school run bar, it won out of 13 total occasions where this has happened in the last 15, 16 months. It's worked on all but 2 occasions. So 11 out of 13 times you take this trade, it wins. Okay. Oh, actually, you can take away the final one because that's the 9th itself. Okay. So on 10 out of 12 previous occasions to the 9th of April, this won. So obviously, when I see this, I take the trade because it's got a very, very high probability, and it did win. I trade 2 different accounts, currently both challenge accounts, so not real money until I pass the challenge, which is just a profit target. I made 1,157 on one account. I made 876 on the other account. One account's in pounds. This 876. This is pounds. The 1,157. This is dollars. That's just how the prop firms work. And that was the trade. So let's look at a losing example as well. So if we go back to the previous day, if we go to the 8th of April. Okay, so the 8th of April, we've got, now this should have been a winning day, and I'll explain why I screwed this up. But this is an interesting example because this should be a winner, but I ended up losing money. And this is a good example of why it's so important to follow all my rules to a T in order for this to be profitable. So we have I'm not sure if this is a gap up or down. Let's go back and check. Let's go to the 8th of April real quick. Okay, so this was a gap up. Yeah, this was a gap up. Okay. Market's opening in 2 minutes, so I'll try and be quick with this, and then we can watch the live chart. Okay, so we have a gap up. First bar is red, second bar is green. So let's reset the filters to a gap up. First bar is red, second bar is green. It was an inside bar, meaning the second bar didn't break above or below the first 15-minute bar. Overnight range location is within the overnight range. So it didn't break above or below the overnight range. And the entry signal is below. So what you're going to see here is there is not going to be any prior examples. So when I get no prior examples, this is the 8th itself, I tend to mess around, remove a couple of variables to see if we can get anything more. So let's say we don't really care what the first bar looks like. Do we get any more examples? No, we don't. Okay, let's say we also don't care what the second bar looks like. Do we get any examples? Okay. So now we get some more data. Okay. So now we look at what's happened in the past. Well, if I buy below, out of 11 occasions, it would have won 1, 2, 3, 4, 5, 6, 7, 8. On 8 out of 11 occasions, this setup within the overnight range, buying below on a gap up day would win. Okay, so I did that. I bought below. Now, this is where the details really matter. And I'll show you this on the actual chart itself. So this green bar here is the school run bar, this bar right here. Okay, so this is the one we're concerned with. Now, I enter a long position, meaning I'm buying the market, wanting the price to go up. I bought that here. Now, at some point, if the market moves against me, I need to accept that I'm wrong. I need to take my loss. And the amount of money I lose is set by me. I choose how much I can lose. Now, the stop loss size is the size of the school run bar. So the school run bar was on this day 50 points. That's right, 150 points. Yeah, this was heavy volatility. So my stop loss size should have been 150 points. And my profit target is also 150 points. So this would be going for a 1-to-1 risk reward. So the green area is in profit and the red area is a loss. The bottom of the red area is where my stop loss should have been. And this would mean if it hit this level, I would take my loss, which would be about £1,000 per account. See you later. The green would be where I would take profit, and I would then be banking about £1,000, give or take, per account. I didn't use a 100-point stop loss. For some reason, I decided on a 100-point stop loss. I don't know why, to be honest. I think I just forgot. It was a bit of it wasn't intentional rule breaking. It was just a lack of concentration. And you can see that the market just taps my stop loss here before moving all the way to where my take profit would have been. So this should be a winning day. It ended up being a losing day. So this is where the details really matter. If you don't follow every part of the system, then the probabilities, the favorable probability that I have developed through my research does not stand if you break any single aspect of the system. So that's a nice example of a loss where it shouldn't have been. But losses are going to happen even when you do everything right, because this is simply a system of probabilities. So that trade there was what was it, 7 out of 11 or 8 out of 11? 8 out of 11. So that's whatever that is, 70-something% probability of winning. So that means approximately 1 in 4 times I take this trade, it will lose. But 3 out of 4 or more times I take the trade, it will win. So that's what this is. Anyway, the market has opened. So let's have a look what's going on. Now, we don't need to panic and rush into anything. Our system does not actually come into effect until 30 minutes in. So we've got another 27 minutes before we're actually going to take a trade. But we want to be looking at what the market is doing. Because it's not just about the shape of the candles once it closes, it's how it moves while the candle is live. So yeah, let's have a look. So on the left, I have got a 15-minute chart, and on the right, I have got a 5-minute chart. The 15-minute chart is what I use for my school run strategy, but the 5-minute chart is what I sort of look at to gauge where the market is likely to go and what the behavior of the traders are like on any given morning. So what's happened here is we're sat currently within the overnight range. We've tested the previous day's closing price, and the market is trying to decide whether to break above and test the highs of the Asian session or whether we're going to come back down. Wider context, it has been probably, besides the Christmas week, the quietest week of trading that I have experienced since I started in January of 2025. I'm going to put this down mainly to the very fragile ceasefire that we've got going on between Iran and the USA, because the market really has no idea what to do. The US markets have been really strong, most of them breaking to all-time highs, which is really interesting. But the European markets, especially the DAX, which is what I trade, has not been so bullish. It's been up, but very gradually and cautiously. So I've only made one trade this week, and it's Friday today, and that was a break-even trade yesterday. I didn't trade Monday. Monday would have been a day I would have made the trade had I been trading, and it would have been a winning trade if I'd have done it right. But you can't dwell on that. It is what it is. Tuesday, Wednesday were completely flat, market just moving sideways, and yesterday was a similar situation, really. And I did the right thing getting out at break even, because had I held on to the trade, it would have been a losing trade. So sometimes a break even trade is as good as a winning trade if you get out at the right time. And also, not taking trades is also just as good as taking trades. If my rules are telling me not to take it. So the market's hovering around previous day's close right now, trying to figure out whether to move higher or lower. We've made a prior bar high on the 5-minute chart, meaning bar number 2 has broken above bar number 1. And then sellers have come in trying to push the market lower. Now, a lot of this sort of stuff, if this is all brand new to you, then you can sort of ignore a lot of this stuff I'm saying. But for anyone that is learning how to trade or is already trading, this is the sort of thing that you want to be noticing. So we had a prior bar high, sellers have come in, but now buyers are having another go at pushing the market up. Now, when you want a bit more detail on what's going on, you can always zoom in to an even smaller time frame. So this is now a 1-minute chart. Market opened quite strong. Sellers came in here, prior bar high, and now buyers are coming to try and push the market to new highs for the session. I used to watch the 1-minute chart all the time. I found that didn't work because there's just too much noise. So I've opted to go back to only really looking at a 5-minute chart. I still look at the 1-minute occasionally, especially when it's a session with high volatility, but this whole week has been massively suppressed volatility relative to where we were for the previous month. So the 1-minute chart's not really necessary. I'm going to be quiet for a couple of minutes, but then I'll come back. 8:15 is really where stuff starts to get interesting, because that's what we need to start considering. what our setups may look like. So I'll be back in a couple of minutes. Okay, I'm just getting my screens set up. So I've got a few different screens because I have TradingView, which is the platform you're seeing, but I don't trade on that platform. That's just for analysis or watching the charts. And then I have my other two accounts on separate screens, which I actually execute my trades. And if it gets to the point where we're going to make a trade, I will change which screen you're looking at. So you're watching one of the live accounts. So markets currently very, very bullish. We had an indecisive bar number 2, but a strong first minute or two on bar number 3. And we're now testing the high of the overnight range. So we're still not anywhere near yesterday's high. But it will be interesting. There's a 80 points here between the Asian high and previous day's high. So we'll see what happens if the market can actually break above this or not. So 2 minutes left on the first 15-minute bar, and it is a strong one. really hope my microphone and everything is working. So first 15-minute bar about to close, and it's going to close right near or at its highs, which is very, very bullish, and it's going to be closing above the overnight range. Okay, so if we go over to our spreadsheet, there wasn't much of a gap, so I'm not going to be touching that. And bar number one's been green, so soon we can filter for that. But we just want to start considering, so we're not in a rush when it comes to 8:30. What could we have here? What could we get here? So if we run through a few scenarios, so let's look at what happens when we get, no, not that one. Oh yeah. So if we get a close above the overnight range and we're above yesterday's closing price, but not yesterday's high, market triggers long above. That's 16 occasions. Buying above would work on 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 out of 16. So not particularly fantastic probabilities. Now what we want to find out is, well, if we actually look specifically into some of these days, on the losing days, why is it losing? And let's see if we can work out. So I write some notes here on the right hand side. So PDH is previous day high. So this was a losing trade. And it's because the entry was right at the previous day's high, which often acts as resistance. This was also previous day high. Major higher time frame resistance, meaning we're at major resistance point on the daily chart. Again, previous day high acts as resistance, previous day high acts as resistance. So on almost all these losing days, they're losing because the market was at the previous day high. So if this, let's say the second 15-minute bar closes right before the PDH, that's a low probability trade because offers selling will come in at the previous day high, or profit taking will come in, which will push the market lower. So that's, but if the market closes here, you've got an entry with a 60-point sort of fresh air, if you like, 60 points of fresh air between the entry and the previous day high. So that's the sort of context that you need to look into. And this is why I take notes on trade, especially when trades lose. I make a note of why it's lost or anything of note. But what if we have a trigger below? Oh, I didn't mean to do that. Rather than above. Okay, so if the market is below, triggers below the school run bar, but is still above the overnight range. If we buy below, it worked on 1, 2, 3, 4, 5, 6, 7, 8, 9 out of 15 occasions. So essentially, if we're above the overnight range here and above the previous day close, it's bullish. regardless of whether the market pushes below or above the school run bar. If we do end up moving back down into the overnight range, then that does change the trade. So overnight range location, if we change that to wick above, still buying below would work 4 out of 6 times, so 2 out of 3. On this day where it didn't work, we had a fake out above the previous day's high, which means that the market would have tested the previous day's high and failed, which is not what's happening today. So all of this is very context specific. Wow, that is a strong 1 minute candle here. Look at that. So what you've just had there is a break and retest of the overnight range. Now, if you're new to this, don't worry about what a break and retest is. But you can see the market pushed above the overnight range. It's then come back down to test the high of the overnight range, and then big buying has come in there. So you would generally expect some follow through. I'll be back in a moment. So we did not get any follow through on that retest. So we've had a prior bar high now on the 5 minute chart, and the market. So this is now an engulfing candle, meaning we push above and then we go all the way below the low of the previous candle. But now we've got a prior bar low. So this is where buyers are going to be trying to hold the market up. And whether or not they're successful could be quite important to how we are going to trade or not trade this morning. So once again, buyers are coming in at the overnight range high. Okay, so we're just a few minutes away now. And it's bullish, there's no doubt about that. So we're going to be long, most likely. I might be quiet for a minute while I just get everything set up. Okay, so I've got buy order set below the school run bar. I've not got a buy order set above the school run bar, given that we've now started forming a trading range. I still want to be long, but I'm going to let the market break above. If it runs away, then it runs away, but the probabilities aren't particularly high. I would rather let it break above, but get a better entry. I want to see some confirmation first. What I don't want the market to do is make a higher high, and then sellers just come straight in, and I get stopped out within seconds. But buy order is set below the school run bar. So if the market breaks below here, I will be put into a long position. So there's not a lot to say right now. More the market is just moving sideways. So the reason I've not got a buy order placed above the score run bar is that we've not had a true breakout all week. The market has tended to be range bound in every EU session so far this week. And I do not really want to bet on a breakout now on a Friday when the market's been range bound all week. So if the market does break above, I'd rather see it break first and then buy some sort of retracement. So I'd still want to be in the trade. I just don't want to be the first person on board, given what I've seen the rest of the week. The market really teasing the highs. Okay, well, I'm glad I didn't. I'm glad I didn't buy above. Very tricky price action. This tricky to read. Okay, I'm long. I'm long the DAX, which means I've bought school run. So I'm just changing screens over. So here you can see my entry. This is on one of my accounts. My entry is at the blue dotted line. Let me just check you're actually seeing that. Yeah, I believe you're seeing that. I really hope you're seeing that.